Hi, this is Simon with Trade and Perform Coaching, doing a trade review for today, August 1st, 2013. The quick legalese, nothing in this video is to be considered a trading recommendation. This is for educational purposes only. Trading futures, options, and equities is an aggressive way of trading your money, and you can lose your entire investment. So now we've gotten through the disclaimers, let's get to the learning part. And tonight I kind of want to just take a quick look and kind of go, how can I make this a simplified approach and decomplicate this process? Okay, because learning is a step-by-step process, and a lot of people got smoked to the short side this morning. And so when I come in this morning, just kind of taking a look at the bigger picture, when I shrink this up and I look at a couple of days here, what I notice is that this has been, I don't know if you can see this or if we can get this all into one little area, but when I look, we've been up in this area, this pre-market resistance, 1, 2, 3 times, and it's rejected. You have to know almost immediately, if we gap above here, there are people who've been successfully shorting this area repeatedly. They are going to turn and have to come in on this gap above this area. And secondly, and very importantly, those who've been in a cash position and waiting for the market to pull back, whoever's ready to panic at this point, they're going to come in here. And the only way that shorts are going to get saved when I'm looking at this is I know that I'm going to have to get below this area right here. And really, more importantly, I'm now have to get below 1688. This whole area here has just been a great area to sell, going back to the really going back to the 18th. Everything up here has been a good sell in this area, particularly for larger time frame swing traders. So those guys who didn't cover those positions, guess what? When you gap above this zone, the first thing you have to be thinking is, hey, those guys are going to come in. I don't want to press my short unless I can get below that area where I'm going to be able to get participation from other traders to help push down. So the other thing that I'm looking at, now that we've covered that quickly, is as I get over here, obviously we covered a lot of days here. Okay, so here we are back in here, is that I have this pre-market resistance, and right before the open we got up above pre-market resistance. We opened up here near 1696. As soon as we come down, this pre-market resistance is going to have the net same effect. It's rare that we open so far away from the white zone, but that first closest zone, when it pushes in, is going to have the same net effect as the white zone. And I'm going to be looking to get long if I can right in there. As it was, I was distracted this morning, was not able to get a trade off in here. But this, I would treat this area the same as I would treat a white zone. Okay, and you'd have to have a reasonable stop. Usually for me, it's 2 to 3 points back behind the back of this zone. This zone is acting as prior resistance, is now support. As support, this is the top of the zone or the front of the zone, and this is the back of the zone. So if I'm not getting long, if you just can't stomach it, I'm not shorting until I can see us penetrate back down in through here. Just keeping it simple. The other thing that I'm looking at, we're getting up to initial resistance, and the market's pretty stretched, right? Market stretches up and down. You gotta just kind of think in your mind, well, how far are we going to stretch before some people are going to become interested in selling? And if you look, we closed here, all the way down here at 1685 yesterday. By the time we get up to initial resistance, we're pushing up here at 1699. That's 14 points, almost 15 points to 16 points right in here. That's a lot, and usually I anticipate that we're going to get some kind of rotation when we're that stretched, particularly quickly with no backing and filling. That's one thing that I'm thinking of. The thing that has me cautious here is, again, we've just broken out of a major resistance area, and the rotations, look at the swings up, right? The swings up are so much bigger than the swings down, and usually what happens to less experienced traders is they start going, hey, I'm going to hit a home run here. They're already thinking that they're going to short this, and they're going to get one of these style whip downs. okay? And that is the problem. That is the problem that I have when I'm training traders, is that so many of them are looking to get a 5-10 point swing when they're struggling as traders. They can't stay consistent on any type of time frame. And they're swinging for 5 to 10 points because as you lose more and more money in your account, or your frustration grows and grows, you're thinking, if I could just have a big day, I will be okay, right? And you're constantly searching for those big days, and and what that ends up doing is you're passing up all the easiest trades that are out there. Now, you will often hear me say middle to back of the zone is the least aggressive point on which you can pit a trade, and my focus is on the first time into a zone. Why do I say that? It has nothing to do with where it is in the zone. The simple fact is if I place a trade at what here would be the front of the zone, right? I have to let enough space behind the zone to let the trade work, which is usually somewhere between 2 to 3 points for me. Okay, so if I'm going to give it 2 to 3 points behind this zone, right, the further you push back, the less of a stop you need. Let's say you're going to do 2 points behind and you can get it within a half a point of the back of the zone. Your stop is now 2.5 points, versus if you take the front of the zone, you need 4 points, maybe 5, to make this trade work. Okay, so the least aggressive stance is because it's least aggressive in terms of how much equity you have to put up. But if you look, this first push into initial resistance still gave you a 2-point rotation. Now, here's where traders run into problems. If you're going to focus on trying to get this 5 and 10 point move down, right, odds are you either scratch this trade in frustration after waiting forever to make the trade work, right? And if you really were bad and you tried to ride it out all day, you covered somewhat in here because this was a bit of panic covering. Okay, the art of this is to watch the simple nuances, and if you don't have your trade plan down, meaning my most basic trade plan, and I have several strategies that I use, but my most basic trade plan is I focus on taking 8 tick moves and putting it in the bank and getting it 1 to 2 times a day. And if you look right here, first move into the zone yielded you 8 ticks. First move into this zone, no matter where you took it, you were able to get 8 ticks out of this trade. Okay, so that's, if you'll do the math, that's 2 points a day. And simply go through there and calculate, well, if I could do this 2 trades for 2 points a day, that's $200 per contract traded. And then just do the math out where you're increasing your trade size. Let's say every 7 to 10 successful trades. How long do you think it would take you to build an account? Now, is there more to it than that? Is it simply like a magical overnight thing? No. But what you do by structuring your trade, where you're entering at a specific point, you place your stop and you place your exit, is you stop thinking about what you stop thinking about trying to figure out the market, and instead you're able to observe and get the message that the market's trying to send to you. And so the question that follows that is, okay, well, Simon, what is the message that the market is sending? Well, the first thing I notice is there's no attempt at any kind of serious gap fill. So the first message is, hey, the market's strong. That's the simple message that's being sent. I don't have to figure that out, right? The second thing, we're making a series of higher lows, and literally all day. Like this is a 5-minute chart, and it's simple to see. There's just higher lows through here. Shorting is difficult when you keep making higher lows. It's a very simple message the market is sending. Okay. Then the last piece is, and people mentioned it, we got to the top of the hour. I said, hey, fading the last hour is a difficult job. Okay, and this is the reason why it's difficult. Let's say you were smart and you nailed it right here, and you thought, oh, we're going to roll over just like we did yesterday. People hit home runs with this yesterday. There was all kinds of hoopla. Okay, well, if you did that today, what most likely happened to you is, let's say you didn't make a mistake and you actually didn't short in here, and you didn't short in here, and you actually caught this top, right? And you started to roll over. It's 30 minutes till cash close, and so now it's time for a party because you think we are just going to crater. And the next thing you know, the buyers step in, and people panicked, and you ended up covering the high of the day. Okay, taking a loss at the end of the day when there's no time to recover it, and you're going to have to sleep on it all night long. It's damaging to your psyche, to your emotion, and it's just a sucky way to end a trading day. Okay, the other part of that is you are going to have a ton of regret, because you could have shorted. If you chased and you shorted here, and I hope you didn't, you covered here only to watch it just get crushed in the last 15 minutes after the cash close, right? It's just agonizing, this little series of moves. Okay, and I can tell you, you also are bound to make trading errors. And here's where I made my trading error. While I was not long ES end of the day, I was long NQ, but I missed. I'll show you what I missed. A clear tick divergence on the 1 minute chart, and you can see it right here. Right as we were pushing in, and I wrote in my notes, I expect strong resistance in this area. I put it in the morning notes, right? And if you look at this entire push here, right, and you will see this. I'm going to highlight it for you. And you'll see here that we came within a tick of this 1704 to 1706 resistance point. We missed it by a tick, and on just huge tick divergence right there at the end of the day. And while I wouldn't have faded it, I missed dumping my NQ position at the highs. I still got a great price out of it. I wrote it multiple times out of this zone, which I'll show you. And again, my theme today was also keeping it simple. Buyers were in control all day. Here's my NQ chart. This is Globex highs. White zone was here. Buyers were in control. And every dip, okay, again, the focus was on the first move into the zone, right? And we easily, out of that 08, we needed 13 to give us our 5 points. That's the equivalent of 8 ticks in ES. Easily got that. Kind of tried to shake us down here into the zone, but you still easily got that move up. And then if you look all day, the top of this zone, just higher lows all day. It didn't take a rocket scientist to figure out that we could get a push here at the end of the day. The difference was, instead of me noticing that tick divergence and getting it out at 31.22, I ended up taking it out at, I believe I took it out at 31.19. So fatigue plays another issue with trading all day. And even though I didn't trade all day, you're still tired at the end of the day. I start early with the euro and getting my charts ready. And so by the end of the day, I can make mental mistakes. So in wrapping it up and keeping it simple, okay, if you have a set trade plan prior to, you know where you're going to take your trade out, P&L wise, from a loss standpoint and from a profit standpoint, right? And you know that where you are entering your trade has an edge. And I know for a fact that these zones provide me with an edge. And you're welcome to look through my blog. You'll see it time and time again. These zones provide me with a repeated edge. Okay, and that edge, because I focus on the first touch into those zones, the first move into those zones, I know that I have such a high win rate with that the more wins I stack up in a row, that allows me to increase my trade size. And so I don't have to find 4 or 5 trades for the course of the day. I can focus on those 2. Now, as you get better and you want to add more trades to it, super. There's a lot of trades there. There's more advanced trades that are there. But do yourself a favor. Focus on building your account first. Take your time and set a structure, a mental structure and an emotional structure, so that you can see what the market's communicating instead of what you want the market to do. Once you move from seeing what the market's giving you towards that and away from what you want the market to give you, your trading results will become much better, and it'll be so much easier, and it'll be so much less stressful. So my name is Simon. I'm with Trade and Perform Coaching. I hope everyone had a wonderful day. I encourage you, if you're a struggling trader, to step back and see, do you truly have an edge? And do you have a plan to exploit that edge? And do you have a discipline to stick to the plan? If you need help, please feel free to contact me at tradeandperform@gmail.com. Have a great night, everyone. I look forward to tomorrow.